Things seem to just keep getting worse in terms of quarterly results for Soma Gold this year, after the second quarter failed to improve over Q1. And things didn't get any better from there. In September, the company was hit with a strike by its unionized workforce at the El Bagre gold complex in Colombia, resulting in operations at the mill being halted for the final 22 days of the quarter. And if we're being honest, that strike hasn't set the company up well for the fourth quarter either, with the strikes lasting until November 5th, meaning even more production days were lost in Q4 than in Q3. So how bad is it? Let's dive in. Soma Gold in the third quarter reported top-line revenue of $18 million, down 19% on a year-over-year basis, and the first quarter this year to not crack the $20 million in revenue mark. That top-line figure follows the sale of 4,000 ounces of gold and 5,300 ounces of silver, a decline of 38% and 35% on a year-over-year basis from 6,500 ounces and 8,200 ounces respectively. The average realized price of gold, meanwhile, improved from $25.28 to $33.09 an ounce, a 31% improvement year over year that assisted in stemming the losses from lower precious metals sales. Income from mine operations, meanwhile, dropped 24%, falling from $7 million to $5.3 million in the third quarter. Net income saw a more drastic decline, falling from $1.2 million or 1 cent per share in Q3 of 2024 to $400,000 or 0 cents per share in the third quarter of this year. EBITDA likewise dropped from $9.1 million to $6.2 million, a trend that was mirrored in adjusted EBITDA, which fell from $9.1 million or 10 cents per share to $6.6 million or 6 cents per share on a year-over-year basis. As per CEO Jeff Hampson, those 22 days of downtime from striking employees resulted in the reduction of 1,500 ounces of gold in terms of production, or $7.7 million in top-line revenue, while EBITDA was impacted to the tune of $3.1 million. To make matters worse, the prolonged downtime also resulted in damage to the thickener and leach tanks, reducing throughput post-restart to 75% of capacity, with operations not expected to return to full capacity until mid-December once repairs are completed. Soma ended the quarter with cash and cash equivalents of $16.7 million, up from $3.8 million at the start of the quarter. That jump in cash holdings follows a $17.3 million funding round conducted by the company in August. The company also saw the settlement of a $10 million loan in the form of equity over the course of the quarter, and the settlement of a further $5 million in debt, boosting working capital to $28 million as compared to $16 million at the start of the quarter. Moving on to the operating side of things, Soma Gold in the third quarter recorded the production of 4,100 ounces of gold and 5,300 ounces of silver. As you may have guessed by now, production of both metals was down on a year-over-year basis, with gold production declining 37% from 6,600 ounces in Q3 of last year, and silver production declining 35% from 8,200 ounces. But it wasn't just the 22 days of suspended production that slowed things down here. Ore mined was down roughly 2,000 tons, from 31,000 to 29,000 tons in Q3, while milled ore dropped from 36,000 tons to 26,000 tons. Average grades, meanwhile, dropped from 6.4 grams per ton gold to 5.8, although this was made up slightly by a boost in recoveries from 88.1% to 89.05. As for costing, cash costs jumped 30% year over year, from $12.56 to $16.33 on a per ounce basis, while all-in sustaining costs jumped a whopping 57%, going from $18.35 to $28.85 an ounce. The rising price of gold, however, helped things here, with average realized cash margin still managing to improve 32% year over year from $12.72 to $16.76 an ounce. Of course, with the prolonged production halt due to employee unrest, the original guidance provided by Soma for 2025, which amounted to 32,000 ounces, is shot. The company was behind that target at the end of the second quarter, and subsequent events have ultimately made that target impossible. Well, we were originally told that the third quarter would see production of 8,000 ounces of gold. That didn't happen. And the original Q4 target of 9,000 ounces of gold simply won't happen either, especially with the mill not operating at full capacity despite operations resuming. As a result of the strike, Soma in mid-November signaled that 2025 production would be impacted to the tune of 5,000 ounces of gold, or about 16% of original production estimates. Further headwinds may also occur until the end of the year due to potential delays in the remediation of equipment. But so far, 2026 estimates remain intact, with both mills operated by Soma expected to return to full capacity by early January 2026. Current projections suggest 65 to 75,000 ounces of annual gold production over the medium term, which is defined as the next 18 months. Oddly, we couldn't find a reference to 2026 specific projections. All right, so let's wrap things up. Q3 wasn't that great for Soma Gold, and we already know Q4 isn't going to be great either, and likely worse than Q3. For investors, that means there's probably a bit of a pain ahead until things return to full capacity on site. Well, we'd like to say this couldn't have come at a worse time considering gold's rally this year. The truth is that rally likely saved Soma from being in a far more precarious position once that strike hit. In any case, this is a growth story, and growth stories always have some hiccups. All right, everybody, thanks for watching. As always, if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. Also, if you want more mining content, check out our website over at thedeepdive.ca. And if you have some story ideas for us, as always, let us know in the comment section. Thanks for watching, everyone.